key theme for investors in June will be the ECB meeting. Whilst we see very little scope for big and immediate changes to ECB policy at this meeting, we do think that we'll get a sneak peek to the ECB's future policy for its upcoming meetings. Economic fundamentals probably do now justify the ECB changing its policy tact. 14 of 19 Eurozone countries reported above average GDP growth in the fourth quarter of 2016, and regional PMIs are now demonstrating a synchronized uptick in business activity. So the die is cast, and there is now room for the ECB to unwind some of its policy stimulus. As ever, for both the market and the central bank, timing will be everything. The most likely scenario is that the ECB just changes the language of its statement. But given the market's focus on these sorts of things, even such a move could prove key for performance of different asset classes in the coming quarters. As the market starts to price an increased probability of the ECB unwinding at least some of its policy stimulus, we're now focused on three key themes. We're negative German government bonds, we hold a positive view on high yield credit and also equities, and a negative view on the low beta segments of fixed income. And we also think that the ECB's unwind of its policy stimulus will be positive for the euro currency. The reason we favour high yield and equities during this phase is that we expect the market to respond positively to the validation that the ECB is now giving to the strong economic fundamental backdrop across the eurozone. Low beta segments have benefited enormously in recent years from the ECB's policy stimulus. As this is unwound, we expect this to become dangerous waters for investors across the eurozone. Whilst we see limited scope for concrete action from the ECB at its June meeting, we do think that we'll see some changes to the language of the accompanying statement. In the current context, there's a lot of focus on the language used by the ECB, and as a result, we think that this will be sufficient for the market to start repricing various asset classes accordingly.